All right, we are live. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. We got a ton, and I mean a ton of stuff to talk about today. So many things happening, but I couldn't do it without my main man, Fat Man Zoom. What up, my big man?
Hey, what's going on?
Good to see you, brother.
Yeah, good to be here. I don't want to spoil it. I didn't see what you put in the title, but we're talking about Penn today, so I had to be here for any Penn conversation.
Yeah, that's right. So we have Penn National that is acquiring all of Barstool now that we'll be talking about. We have earnings. We're going to be covering Applied Materials, Ross, Bill.com, and then Foot Locker and Deere will be reporting tomorrow. So we're going to chat about that a little bit. Also, the Bed Bath & Beyond drama. There's now another one after Bed Bath & Beyond that is now taking off. So we're going to be talking about that as well. But before we get into any of that, Fat Man Zoom, why don't you hit everybody up with the starting five?
Starting five: Bodie Beard, John Gosson, James Brown, Savvy Money Show, and Gabriel Navarro. You are starting five.
Yeah. So real quick, Fat Man Zoom. I'm not quite sure if you've seen this or been following it at all, but Bed Bath and Beyond, the new meme stock. Over the last couple of days, it's gone absolutely insane, 400% since middle of June, end of June, something like that. So it's been going crazy. It's down 19% today on a filing that was released by Ryan Cohen, who is the chair of GameStop. Bought up nearly 10% of Bed Bath & Beyond, and then put a filing out yesterday indicating a potential selling of those shares, which is why the stock is now down over 50% from its almost 50% from its highs. Sorry, the highs were around $30 just a day ago, and now is down nearly 50% from those highs. So one real quick thing I wanted to address. I actually put a video out on this as soon as the market closed when this filing came out. I saw a lot of headlines indicating that he had already sold because of this filing. So I ended up actually deleting that video, a rare delete, but I thought that it was appropriate. It was semi misinformation, but I actually cross-referenced a lot of other headlines and read through some things, and it seems as if that was the consensus. That's the catch-22 with trying to get content out as soon as possible. So I do apologize to those of you who took offense to that. There was a lot of comments in that one in the first hour that I went out. So I just went ahead and took it down. But just to clarify everything, there was a form 144 that came out with the intent to sell shares of Bed Bath & Beyond because of the amount that Ryan Cohen actually has. So that's why we're seeing a significant sell-off going today. Now the stock's down around 19%. It was down as much as 25% just today, and the selling had of course started the last half of yesterday. So that's why we're seeing it sell off. We're seeing another stock go off as well. We'll get into that in just a second. But Fat Man Zoom, it's just like, how many times can we go over this? GameStop, AMC, and now another failed business that retail traders just want to try to revive for some reason.
Yeah, it's that I don't know. It's I don't know how to word this the right way, but it's like you're getting the same trick pulled on you every time, and it's that innate. People just want to get rich quick, and I'm not saying people can't win every once in a while, but like it just boils down to common sense. How many people just get rich quick and that's it, and it's over and they're good? Like typically people who get lucky and get rich quick lose all of it, so lottery type. And then anybody who's consistently been successful, it's been more of a long-term strategy. So I'm saying you can't, I'm not saying you can't win off this, but like it like baffles me how people continue to try to like get caught up in this. What have you not learned? Like, tell me all those articles about Doge millionaires and GameStop. Where are they now? I'm not seeing them. So right. It's sad. It's a sad state of affairs.
It really is. And there's some people out there saying that, well, it's just it's a formality, this filing that had to go out. But at the end of the day, these filings, these 13D and 144 filings go out seeking the right to sell stake if you own more than 10%. And that's right around where Ryan Cohen owns his company, RC Ventures. It's a venture capital firm seeking the right to sell the 22,513 shares. So whether that's all of it or some of it, doesn't matter. Obviously, the damage is being done here. And I put in the stream, the poll here is Bed Bath & Beyond stock done? And 81% of you so far that have chimed in say yes. I think that that's certainly a possibility. And one of the big reasons is because we're starting to see some of this money move over to another potential meme stock, and that is MindMed. It's MN. I already had
one more comment real quick on Bed Bath & Beyond.
Of course.
Yeah, so Darren Anderson said, I'm surprised Bed Bath & Beyond stayed in business this long. You know, the interesting thing about Bed Bath & Beyond, to me, the greatest claim to fame, like what would you say the greatest claim to fame of Bed Bath & Beyond is?
I have no idea.
Will Ferrell. Isn't that what he said?
I don't know.
Old School, when he was like, what's the line from Old School? Who knows? I might. Oh, shoot. Anyway, somebody in the chat will say it. It's such a popular line. Like, might go to Bed Bath & Beyond. Whatever.
Yeah, but yeah.
That's like, when was the last time you've been in Bed Bath & Beyond? I haven't been in a Bed Bath & Beyond forever. And when I was in there, it was trash. Like, common sense investing. Like, who goes to Bed Bath & Beyond? I don't know. But I can't wait till somebody brings it up. You'll know it once he said it. It's an Old School line. And like, that's the only reason Bed Bath & Beyond has any sort of relevance at all.
Yeah. And they're shutting down stores. Wedbush just came out with a downgrade today. It is interesting. I don't know. I don't understand why the horde, the Wall Street Bets crowd goes after stocks, companies that actually deserve to be down here. Did GameStop deserve to be beaten down and have more shares shorted than shares were actually available? No, that whole situation was much different. But trying to save AMC that took out debt up to their eyeballs and trying to somehow revive Bed Bath & Beyond for whatever reason, it just makes zero sense. Like, Bed Bath & Beyond deserves to be where it was at $4 a share, wherever it was, because it's a horrible company or horribly run company. And so that to me just kind of like it makes zero sense, unless, to your point, you're trying to just make a quick buck, and maybe that's the case.
The line is, well, actually, a pretty nice little Saturday. We're going to Home Depot, buy some wallpaper, maybe some flooring, stuff like that. Maybe Bed Bath & Beyond. I don't know if we'll have enough time. God, that's such a popular Will Ferrell quote. When you see it, you'll know it. I'll send it to you.
Okay.
Anyways, moving on.
John Daly says, you want to hit this beer bong? I don't know. I can't. The wife and I are going to Bed Bath & Beyond. That's what it is. Wasn't that from the other guys?
No. Well,
okay.
Yeah, I'm pretty sure it was Old School. I never looked at other guys because I don't really remember other guys. I don't think I've seen all of other guys, which maybe
Will Ferrell's like shitting on his wife.
Yeah,
that whole bit was fucking hilarious. All right, so there's Bed Bath & Beyond, and one of the reasons why I also think that the stock could be done is because it seems as if the horde is migrating over to MindMed. That stock's now up 35% just today. We're seeing a huge move on this one. It was down to 53 cents just on August the 8th. Now up 100% since then, and it was up even higher than that at one point today. Getting ready to close the day up 35%. No real rhyme or reason as to why this stock is actually moving up, other than the fact that it's floating around on Reddit somewhere. So just another reason, another stock that could end up suffering a similar fate. So just be careful out there. Obviously, for our Own the Chaos faithful, you guys know that know better than this. Obviously, you kind of know the story. You've been around the block a time or two. But for the newcomers, anybody who's interested in actually trading something like this, just be careful. I'm not going to tell you not to. I'm not going to say that it can't keep going higher, but the likelihood of that happening is pretty slim.
Do we know what this company does? I am not unfamiliar with this company.
MindMed is a pharmaceutical company, I believe, involving psychedelics for the most part.
Mhm.
I know that Mr. Wonderful is, at least I thought that he was invested in this. I think if somebody wants to correct me if I'm wrong on that, if he's no longer part of the company or not, but I know that he had a pretty decent stake in MindMed. But that is basically what they do. That's their
Yeah, I
claim.
see a headline of they did a study that showed they were in phase 2 that showed the benefits of LSD and anxiety disorders, but then there's also another phase 1 trial for something else. I can't see what that is, but opioid withdrawal. So okay, that makes sense. I mean,
Yeah.
and again, this space is prone to these type of swings, and you could be what was that company? Manmeal Chris recently talked about that had horrible results.
To shrooms.
I don't know if it was to shrooms, but um, it wasn't. Maybe it was Skyworks, but basically, with any companies that are through trials, if they go through trials, if they have bad trials, this is what's going to happen. Obviously, if they have positive results for trials, then the stock will go up. But like these swings are normal,
Yeah.
and a lot of times these trials aren't successful. And so I'm not saying you shouldn't, but that's the risk you run because you can make a ton of money, but you could also get your ass handed to you.
Yeah, absolutely. Absolutely. The market had a bit of a surge towards the end of the day. The S&P ended up closing up slightly, 10 points. The Dow was up 20 points, 0.06%, so basically flat on the day, but not bad after being mostly red all day long. And the Nasdaq ended up closing in the green as well. So pretty interesting surge going into the end of the day. But those are your numbers as far as the overall market's concerned. Before we get into earnings, we're going to be talking about Applied Materials, Ross, Bill.com, Foot Locker, and Deere report tomorrow. But Fat Man Zoom came on here to talk about one main thing, and that was Penn National, and well, formerly known as, it's now Penn Entertainment. But this now news coming out that Penn is going to be taking over all of Barstool. So they made the initial agreement with Barstool was that they were to acquire 36% of them right out of the gate in January of 2020, I believe is when that took place, with the intent to acquire controlling interest up to 50% by 2023. And now it has been negotiated that they will be acquiring 100% of Barstool Sports to fully bring them into the fold of Penn Entertainment.
Yeah, so it was 161 million initially for 36%. Then it was going to be an additional 62 million to get to 50%. So for those counting at home, that's what 223 million for 50%.
Yeah.
And now 325 million for the remaining 50%. So, I mean, I don't know about you, but those numbers seem kind of low to me.
Yeah. It's a steal. Penn National is stealing Barstool Sports.
We need to do a follow-up video. We need to do a pre-recorded video, really like trying to find as much data as we can, because we roughly looked at some numbers of Barstool Sportsbook. We roughly looked at some numbers regarding I'm sorry, I'm buzzing over here. The other entertainment that they bring in, whether it be the podcast or whatever. Obviously, the sports book is a huge revenue driver. We haven't even talked about the score as well, which is the similar version in Canada that Penn National bought, and the revenue that potentially could be generated moving forward. But with all that said, it'd be interesting if we can find. We talked about the revenue from the podcast and Penn moving to an entertainment company. Barstool Sportsbook is great, but when they made this deal, would you say maybe Call Her Daddy? Like Call Her Daddy had just been on the map.
Yeah.
But like $1 million worth of game is huge. Pardon My Take was out back then, but it's grown even more. And One Bite is huge too.
Yeah.
What does that bring in?
Tons of money. I mean, think about like what One Bite does just for pizza joints. You know, Dave
Mhm.
Portnoy shows up at your place, gives you a good rating, and that pizza place is set for God knows how long. So many stories of people just lining up out the door to some of those places that he's been to. So the influence is obviously huge, and the $325 million for another half, the other half of Barstool just seems ridiculously cheap, especially because now they're seeing potential for profitability in sports betting by the end of the year.
Yeah.
The Barstool Sportsbook, that's unheard of everywhere else. It doesn't matter if it's Caesars, definitely not DraftKings, MGM. Nobody is anywhere near being profitable on the sports betting side of things, and this includes FanDuel, which is the king of this space. So, because of the way that they can leverage Barstool and the Stoolies, it doesn't require nearly the amount of marketing power because they already have an audience at their fingertips. So, and it's somewhere around 80 million stoolies that they have access to, which is just an unbelievable number. So, in my opinion, Penn National obviously has had it rough over the last 18 months or so, but we've started to see this curl up. This is some pretty good news for them. And yeah,
Why and why have they had it rough though? That's my question.
it was definitely overvalued at $142 a share. I mean, even looking at forward PE right now, it's at 27, almost 28, with it sitting at $35. So with the environment being what it is, and some of the stocks that were just had high valuations, Penn is definitely in that conversation. But the growth here, especially with the fact that they're profitable when no one else is, that to me is worth paying a premium for.
Yeah, and I mean that's when everything was overvalued.
Yeah,
But it was $60 a share in November. So you talk about, let's just say, like the recent downtrend. Let's just say October, it's down 50%. When it was at $70 a share. Obviously, a lot of things are down, but the reasons, like, I think people are missing a lot, still missing the point on Penn. I'm not saying whether I'm saying more comparatively, like why people aren't understanding comparatively to DraftKings, FanDuel. I mean, they're just running their business so much better. And you look at, for example, look at how they built the Barstool Sportsbook side, very minimal investing
yeah,
in marketing. So expenses are very low. So no wonder. I mean, you said it. All of the other competitors are not even close to being profitable. Not
no,
even close. And then you factor in how they run the podcasting side as well. They don't overpay. They're smart with their money, even if that means they know they're going to lose creators to companies like Spotify. But Spotify, again, another company that struggles with overpaying, and they're going to be bit because of that, where Barstool is setting themselves up for long term. And when people figure that out, that's going to add up quickly, all the money coming in and their profit margins that they make off of it.
yeah, I agree. 100%. All right, good stuff there. Let us know what you guys think in the comments as far as Penn and some of the other stuff that we've talked about so far. And right now, we're seeing Applied Materials shoot up here at after hours. It looks like those numbers are in. They came in and had a pretty decent quarter, and guidance is also up as well. So they came in at $6.52 billion in revenue. The estimate was at 6.26, so not a bad beat there. Earnings per share, $1.94 versus the $1.79 that was expected. Guidance is the big key here, and that's why the stock started to shoot up. For Q4, $1.82 to $2.18 is the range that they're expecting, which is on the high side of the estimate, which was around $1.94. So you can see that Applied Materials is moving up some here after hours. Pretty decent beat so far for them.
Yeah, one we've looked at for a while in Applied Materials. I mean, you talk about looking at fundamentals, look pretty solid from a fundamental perspective, and actually, considering everything else that we talked about, it hasn't looked too bad, too horrific.
Yeah.
And kind of holding up. So we'll see what happens. But one that for us, I think has been on the radar for a long time, and hopefully this is them getting back on track.
Yeah, I like this one still. I mean, it's kind of hung around in this range. It briefly fell below this support here, down at 95 bucks a share, what have you. But this is one that's definitely taken it on the chin so far in 22. Just not as bad as some of the other stuff.
Yeah.
It's not. I don't want to say that that it's one of those that has done well this year, but it's just certainly hasn't done worse than many of the other stocks, particularly with speculative tech and tech in general. So yeah, I mean, this is one that certainly looks good still, and the bottom appears to have been in, especially ever since it came down and broke over the 50-day moving average and retested it and has held it since then. I think we have a strong possibility this comes and tests that 200-day sooner rather than later, and the stock's continuing to move up. Here's your 5-minute chart on an earnings beat and guidance coming in higher than expected. This is a good sign for something like Applied Materials for sure.
Give me the other stocks you said that were on.
Ross, ROST is the ticker symbol for that.
Did you say Foot Locker was today? No, or is that my
Foot Locker's tomorrow?
Tomorrow, okay.
Yeah, pre-market tomorrow.
Got it.
So, and then we have Ross, Bill.com, which that's ticker symbol Bill. And then that's it. Those are the ones that will be reporting today.
It looks like Ross is in.
Yeah, that stock's down slightly. It looks like it tanked right out of the gate and is starting to claw its way back. It's only down at 1 1/3%.
Earnings per share, they beat. Estimates were 101, came in at 111. Revenue slightly missed. 4.63 billion were the estimates, came in at 4.58 billion.
So,
and I mean, for whatever this is worth, merchandise inventories estimated were 2.5 billion, came in at 2.72 billion, and total location count 1980. Estimates were 1981.
Yeah. So to summarize, it looks like they beat on earnings per share, slight miss. We'll say they came in line on revenue.
Yeah.
And Q3 expectations for guidance far lower than what was expected. So 72 to 83 cents per share is the range there, is what we're expecting for Q3. The estimate was $1.07. So that's way off on guidance. I'm actually kind of surprised that the stock's is actually breaking even right now. And it looks as if it's trying to go green here after hours too. That's very interesting on a pretty big guidance miss. Trying to see if there's anything or any reason why the stock will be getting bought up here. Granted, it's low volume, so just consider that. But I don't know if there's here we go. So they repurchased $2.9 million of common stock for the quarter. I don't know what the total buyback was, but I would imagine that they still have quite a bit to go as far as the buybacks are concerned. Could be a reason why.
Yeah. And then just for reference, it says Q4 earnings per share $1.04 to $1.21. So hopefully it gets it back in line. But even that, I don't know if they had given that guidance before, but even that seems a little bit low for Q4, but maybe not.
Yeah. As we head into the holidays and stuff like that.
Yeah.
All right. Checking in on Bill. That's up 17.5%. Sizable beat here. They came in a loss of 3 cents. They beat by 11 cents. They beat by the estimate by 11 cents. And then they came in with revenue at 200 million. They beat by 17.12 million. That's 155% year-over-year growth. Organic core revenue grew 71% year-over-year. Transaction fees increased 201% year-over-year. And organic transaction fees increased 90% year-over-year. What an absolute monster quarter for Bill.com Holdings. Jesus Christ.
Yeah, that's insane.
That's massive growth for the company there. For those of you who don't know about Bill a whole lot, I believe they're in e-commerce. The cloud-based software that simplifies, digitizes, and automates back-office financial operations for small and mid-sized business worldwide. So they're in the cloud space, obviously highly competitive. especially as this continues to grow. And we're hearing from Azure and AWS and just how they're just taking over the world right now. But there are smaller ones, and Bill.com obviously a massive growth here for them too. That is a really impressive quarter.
Yeah, it mentions accounts payable automation, payment processing. Obviously, a lot of money to be had in the payment processing space. So what they offer, certainly the competitive landscape is pretty fierce, but if they can, carve out their niche and make space, I mean, there's a lot of money to be had and a lot of opportunity for a company like Bill.com.
Yeah. Crazy. What an absolute monster of a quarter for them.
Yeah.
So there's your earnings that, I mean, somebody was asking about OSIS. I can take a look at that one, but those are the ones that I was planning on covering today. Yeah, it looks like maybe OSIS. I don't know what they do or anything like that, but I could just comment on it. The stock's down 4%. Looks like they probably didn't have a great quarter, but there you have it on OSIS Systems, OC Systems. Pretty decent down day for them. So just to recap here, we had Applied Materials came in and actually had a really good quarter. Let's check back in on that stock, and it's up around 2.5%. As a result, they beat on top and bottom line. Also came in on some pretty good numbers on guidance, and actually, let me rephrase. They came in line on revenue, but actually ended up beating on earnings per share, and then guidance was higher than expected. So that's pretty good. Ross came in and did well too. But guidance was actually light, so the quarter wasn't bad, but the guidance was, and so that stock's down slightly after hours. And then we have Bill.com, that actually is the real winner here, now up 19% after hours and just continuing to climb off a monster quarter, almost doubling their growth year over year, all the way across the board. That is crazy, absolutely nuts.
Couple of comments. Some people had mentioned on the pen conversation we had. Bodie Beard said One Bite has their own pizza in stores. Do you think that could actually be material in any way for Penn?
I don't know. I don't know what the connection is for them for Penn. I mean, obviously I know Dave has his hand in it, but I mean, they're selling like crazy on Walmart and some of the other retailers. I don't know. I haven't even had it yet, so I don't know what the hype is about, other than the fact that it's Dave Portnoy's pizza. But I don't know if there's too much of a connection between that and Penn itself. I think that's like Dave's side hustle almost, more than anything else.
Well, now that they're going to own 100%, they get all the revenue from that, right?
I would imagine so. I just don't know how directly tied One Bite is to the Barstool brand. Like if it was one, it is.
Yeah.
Okay. So then, yeah, I would imagine if they own 100% of it, they're getting One Bite as well.
What I'm saying is that actually material? Like, will they be able to actually make money off of frozen pizza?
I don't think so.
Yeah, One Bite is a huge app, and obviously the reviews get huge traffic, but like I don't even know anybody that's ever even tried the pizza.
I don't either.
It almost seems like a waste. And I mean, maybe it's marketing for the channel. I guess that you could consider it a marketing expense for the actual One Bite brand and get people towards, watching Dave Portnoy's pizza reviews. I guess maybe that's a way to look at it.
Yeah.
But
yeah, maybe.
I think they have a partnership with Walmart. But I can't see it making any material money. It almost seems like a waste of time. Although I'll say the pizza app, the One Bite app, is pretty spot on. Like, even not just his reviews, but like the general reviews are pretty spot on. So if it's a marketing expense, gets people to that, maybe it does help. So anyways, that's it, Bodie Beard.
The app is genius.
Yeah.
Absolutely genius.
And how they have it set up. And I know it didn't cost them money. You could just tell it's very simple, but like, I can't imagine that was any expense for them. And he just continues to grow. It just looks like all he's moving towards is, kind of showing his face on different podcasts to help pump him up and building his pizza brand.
Yeah.
But
it's wild.
I think they should just drop the frozen pizza. But maybe, who knows? I have never heard them mention that in any of their revenue. And Dave Portnoy, since they launched that right after COVID or during COVID.
It probably wasn't significant enough
Yeah.
to be worth mentioning. So, okay. So somebody had asked about ST&E revenue growth of 275% year over year in Q2, 82% X credit. Not seeing actual earnings per share. The stock is down, starting to claw its way back. It was down a lot more than what it is right now. It's down 3.5%. Expectations for StoneCo was 5 cents, which was an expectation of 110% growth year over year. Consensus for revenue was 428 million, which is a loss of or slowing of growth by 30% in revenue. I'm not seeing the total numbers just yet, but it doesn't mean they're not out. Looks like obviously they are. STNE. This is one I think that Warren Buffett was either eyeing up or is in.
Yeah, Ganesh said just Warren Buffett company, so I don't know what that means, but
yeah. Let me see if I can get some more hard numbers here for you guys on this one. Still seeing like that revenue growth. So this is from the CEO. It's just mentioning that the business is performing very well. They're winning new clients faster than last quarter and are producing strong revenue growth while improving profitability. Not really showing any indications as to why the stock might be down, other than maybe they missed on some expectations. Not a whole lot of information. Some of you guys bring out some ones that I've never even heard of. It makes me go digging, which I appreciate. Just not seeing much out on this one. If we see some more hard numbers on StoneCo, I'll certainly bring them to the table, but there's not a whole ton that I can report on just at this second. Holy shit, here we go. Jeff Ward just said Bed Bath & Beyond is dead. Ryan Cohen, let's check out Bed Bath & Beyond right now. There it is. It's down another 14%. So Ryan Cohen is officially out. Or Ryan Cohen's officially out. Ryan Cohen officially put out the filings, it looks like. And let me just double check this. Damn. This sucks. I mean, you can't blame Ryan Cohen because he was up like 400% on his investment. You really can't. Let me see if there's any releases. Here's 8K. Yep, there it is. So I'll leave the chart up. I'll read off the 8K here. This is from Bed Bath & Beyond. We were pleased to have reached a constructive agreement with RC Ventures in March and are committed to maximizing value for all shareholders. We're continuing to execute our priorities to enhance liquidity, make strategic changes, and improve operations. Yada, yada, yada. This looks like this indicates still just reading through, guys. There's no confirmation on this 8K that says that they sold it. Let me see. So you can find another one. That's the 13G. I mean, the stock's certainly reacting as if they sold everything, but I'm not seeing anything in that 8K in particular. Let me see if I can find something on. When in doubt, go to Twitter. Yeah, and it looks like Cohen did unload a decent amount. Here we go. Yeah, they sold all of it. It looks like between August 16th and yesterday. Looks like they sold a decent amount, if not all of it. Here, I'll show you guys what I'm seeing here. So here's the numbers here. I can't remember how many he had. He had quite a few shares, but this looks like it's pretty much all of it. You can see that he sold a ton of it. He's no Adam Aaron, that's for sure. There you have it, folks. Bed Bath and Beyond is dead. All right, so Jeff Panicka asking about John Deere and Foot Locker. My perspective on Deere. So expectations for them tomorrow. Let's take a look at that chart. Expectations for Deere were that there are some headwinds for them. Estimated earnings per share $6.68. Revenue is expected to come in at $12.84 billion. So obviously a ton of money, but compared to last quarter, they actually missed earnings per share. So they missed their came in at $6.10, $12.03 billion in revenue. So the bar's still pretty high, I feel like, for Deere. I like the company still. They're almost what I would say is a recession-proof type stock. Technically speaking, they're up over the 200-day moving average and have held over it quite well. It looks bullish AF. So if they come in and beat those numbers from a bar that's set pretty high for them still, I mean, Deere could really get a move on. Either way, it's a great long-term stock to hang on to. They have a pretty decent dividend as well. Jeff, if you've been holding on to this one for a while, I would say if it were me, I wouldn't have any reason to be selling here, especially because of the bounce that it's had, and it's been doing quite well. The momentum is certainly there. Obviously, earnings could ruin a lot of that, but there isn't enough there for me to be like, yeah, you should sell this or you should be out of it. You know, that's kind of where I'm at with it anyway.
Yeah, I think to your point, certainly recession proof, certainly regardless of how the economy is doing, I think there's a place for Deere. And then on top of that, I would almost say this is an opportunity where, let's say it goes down to the 50-day,
Yeah,
really good, like you don't have to be buying here, but like certainly if it approaches the 50-day, I would be really excited about it.
Yeah, for sure. Yeah, I mean, like being a buyer up here, certainly a lot of risk there. But I mean, if you've been a holder of it for a while, not a whole lot of reason why I would say it's ready to jump. It's time to jump ship.
Yeah.
Foot Locker. Some people are asking about Foot Locker. They have earnings tomorrow too. I know, Fat Man Zoom. This is one that you actually took a liking to as retail was making its move. You know, during this period of time, and they have earnings tomorrow. They just issued a dividend of 40 cents per share. Their estimated earnings per share tomorrow pre-market is 80 cents, $2.07 billion. They came in and beat on earnings per share last time around and missed on revenue. This has been a really tough time for retail in general. We just heard from Ross as well. The guidance there was down. So I think that this could probably be more of the same for something like Foot Locker. But again, momentum is on their side here. There's a lot of risk just getting in right here, but if you could see what tomorrow's earnings bring, it might present itself with some pretty decent opportunities. Either one of two things are going to happen. This breaks up over this resistance here around 33.50-ish, has a pretty decent cup and handle looking pattern on the daily, and so a gap fill all the way up to 37 could certainly be possible if they have some sort of blowout quarter. But if not, it could end up letting itself for another opportunity down here around 26.50.
Yeah, Foot Locker's tough. I mean, apparel in general has been a interesting ride. It's challenging right now. If you're talking about the long term, you look at the yield for Foot Locker, solid. I can't say necessarily I would imagine it's going anywhere, but I think it's also a kind of a victim. This is the story for a lot of companies that did well over COVID, especially apparel companies over the pandemic, is like you got numbers that it's hard to overcome. And this year, comparatively to last year, and next year comparatively to this year, you're seeing slowing revenue over the short term. So that's the things to be aware of. Not worried about Foot Locker at all, but the bar's kind of low for this quarter, in my opinion.
Yeah. I mean, and if they can't jump over that, then they're in some big trouble.
Yeah. So that's the thing, is like if they miss, it could get ugly.
Yeah.
But you talk about the move to e-commerce, and we haven't really talked about that much. But that's obviously you anybody who's been to the malls, you see the challenges that are faced in that, and how do you evolve? How do you move? That's the question for Foot Locker moving forward. They have an opportunity to be dynamic and to do different things, but there's also some serious risk at play as well. With all that said, I think it's a similar situation. I wouldn't necessarily be running away from this, but I'm also not anxious to be running into it as well. I'd probably just hold tight if I owned it, kind of see how things play out.
Yeah, I agree. All right, guys, thanks so much for tuning in tonight. And Fat Man Zoom, thanks for hanging out with me this afternoon as well. That's going to do it for today's show. So if you guys haven't done so already, make sure you're liking, subscribing, hitting that notification bell. And tomorrow we'll be back live at for the DC TV. So make sure you guys check us out over there as well. And that's going to do it for me. Thanks, man.
Thanks, guys. Bye.